The United Kingdom and India have finalized a free trade agreement after 3 years of intensive negotiations. Both countries are hailing this as a landmark deal that will significantly boost their economies. The British government anticipates this deal will increase bilateral trade by £25.5 billion. UK GDP is expected to grow by £4.8 billion, while wages could see an annual increase of £2.2 billion in the long run. The deal includes significant tariff reductions. Taxes on whiskey and gin will be reduced from 150% to 75% immediately, and then to 40% over 10 years. Automotive tariffs will also be reduced. The UK will reduce tariffs on textiles, while India will lower duties on cosmetics, aerospace, medical devices, and certain food products. In stark contrast to the UK-India agreement, Donald Trump has stated that the United States doesn't need a trade deal. This statement comes amid his implementation of steep tariffs affecting nearly all goods imported into the United States. Trump has declared a national emergency to address the U.S. trade deficit, imposing a 10% tariff on all imports, with even higher tariffs for 57 countries. This graph shows the U.S. goods and services trade deficit that Trump is targeting with his policies. This section highlights the contrast between the UK-India Free Trade Agreement and the protectionist trade policies currently being pursued by the United States. While the UK and India are reducing trade barriers to boost economic growth through bilateral negotiations, the US is increasing tariffs with a focus on addressing its trade deficit through unilateral actions. Trump's trade policies are characterized by reciprocal tariffs, which aim to correct trade deficits. However, economists generally disagree with the view that trade deficits are inherently harmful. The IMF estimates that Trump's tariffs could reduce global economic growth, leading to slower growth, higher prices, and greater unemployment. China has retaliated to U.S. tariffs by imposing a 125% tariff on U.S. goods, escalating the trade tensions between the world's two largest economies. These trade actions are causing significant shifts in global supply chains. As a result of the U.S.-China trade tensions, Mexico has now become the largest trading partner of the United States, surpassing both China and Canada. While Trump aims to sign trade deals with India and other partners, the current approach is creating significant economic uncertainty. This disruption to global trade flows is leading to higher prices for consumers, volatility in markets, and hesitation in business investment plans. In contrast to tariff-based trade policies, the UK-India deal serves as a counterpoint, demonstrating the potential benefits of free trade agreements in a globalized economy. Such agreements aim to reduce barriers and foster economic growth through increased market access.